What's up, guys? Welcome to Invest Today. My name is Jack, and today's topic is extremely important, especially if you're just starting out. The topic for today is the three biggest mistakes that newbies or beginners make in the stock market. And I myself are guilty of many of these on multiple occasions. And I kind of want to give you guys these three mistakes and tell you and teach you about them now so you don't fall in the same traps that I did. So, getting right into it, the first big mistake that I see new investors make is selling on a pullback. Now, whenever you buy a stock, I want you to do one thing. I want you to make 3 bullet points, just real quick bullet points, one sentence each on why you're buying the company. And this needs to be big picture. Product launches in the future that will change the game, good founder-led CEO, and he's a rock star and you like him a lot, and that could be a reason for buying the company. It's got a great management team, stuff like that, big picture items, and you just want to save those in a Word document and just keep them. And because when a stock pulls back, and that they do that's the nature of the game. Stocks pull back for sometimes no reason, or sometimes some of the fundamentals change. And I want you to look at the stock that's down 3, 5, 10%, whatever it is. And I want you to go back to those bullet points and look and ask yourself the question, has the fundamentals changed? And if not, I want you to consider buying more. Seems counterintuitive maybe. You're down 3, 5, 10%. And if you buy more, it continues to go down. Your losses only mount and continue. And it's painful. Trust me. I've been there. But I really want you to look at the fundamentals, the big picture of the business. And that's where the real money can be made, because stocks go down in the short term and then, gets to a certain PE ratio, and big money investors, they like it at that price, and it starts to go up and you make great gains on it. Absolutely. So I want you to really take a look at the fundamentals of the stock, and I want you to buy more if the fundamentals have not changed. If they have changed, CEO departs, without really any reason, a big product that was supposed to change the game gets delayed or canceled, then it's time to get out and absolutely sell the stock, cut your losses down 3, 5, 10%, and we'll move on and we'll find a better stock and you will make some gains on that one. So definitely, if some major fundamentals change in the stock of the company, get out of it for sure. But if they haven't changed and the stock pulls back even 10%, I want you to consider buying more. Okay, guys, number 2, jumping right into it, investing in unprofitable companies. There's a certain stock out there that I'm going to dedicate a whole video to, which is an unprofitable company in which I lost 40% on. And it was an absolute disaster. It was my third stock that I ever invested in, and it's painful. I still go back to the charts today and look at what I could have done different, because at one point I was up 30% on the stock. I know. I gave up all those gains and it went down 40% more. So it's a 70% fluctuation there that I totally missed. And I ended up selling out around 40% down. So I want you guys to avoid this mistake, and I want you to avoid investing in unprofitable companies. The risk is just too great, especially if you're a beginner in the stock market. You don't have a ton of money to throw around. Stick to the reputable companies who can turn a profit. And I've lost far more money on investing in unprofitable companies than I ever have investing on profitable ones. And there can be a great advantage, absolutely, to investing in an unprofitable company, maybe a Facebook or Netflix in the early days, and then they start to turn a profit. They got a PE ratio now, big money likes them, and then you see 100%, 150% gains, and it's crazy. I mean, that's awesome. That's amazing. And, good on you if you can do that and you're willing to take that risk, and that, sometimes it's worth it. But I'm saying, as a general rule of thumb, stay away from unprofitable companies. It's one of the golden rules that you really need to stick by. Assume less risk, especially if you're new. Again, these 3 rules are tailored to a newer investor, someone that's just coming into the stock market and doesn't have a ton of money to throw around. So number 3, guys, and this is a big one. I kind of saved this for last because it kind of encapsulates the whole first 2 examples, and that's too short of a time horizon. You want to turn a profit quickly. Everyone does, and that's great. A company goes up on earnings, whatever it is. It's too short of a time horizon. People will invest in a company, and you got to do your homework on it for sure. But I want you to focus on the long term. Go to those bullet points and really make those 3 bullet points long-term focused. I want you to think of like the Warren Buffett approach that he takes. He buys and holds, and he does his homework, and he'll continue to invest on pullbacks, and he'll reinvest his dividends. All good practices that I want you guys to do. Definitely dividend and reinvest. and look at it as like you're buying part of a company. You're not just, trading numbers on a screen, and that we can say that for the day traders, that's fine. But if you're going to be an investor, I want you to have a longer time horizon, 1, 3, 5 years, whatever it may be. It could be less than that. Great. And that's fine. But I want you to really focus on maybe like a 1 to 3 year time horizon. Maybe 5 if you have more time. You're starting out in your early 20s, maybe teens. And that's awesome. But I want you to buy it and hold and continue to do your homework. You got to listen to the conference calls. 10Ks, 10Qs, the reports, the quarterly annual reports from the companies. You've got to read all those. And they're long, they're 110 pages, and it's dry for the most part. But that's how, when you really dig into the numbers, that's how you find those great companies and make that great return. And especially if you reinvest your dividends and have that long time horizon, you continue to do your homework, the stock continues to go up, none of the fundamentals change, and that's how you can make that 100% return that everyone wants. It just might take a little bit of time. You have to be patient. Your return grows over time. It's not something that's going to grow overnight. No stock goes up 100% overnight. It just doesn't. I'm sorry. I wish it did, trust me. But, if you're really that long-term focused, you're going to see the gains over the long period. And that's, especially if you're young, you got all the time in the world. You have all the time in the world to invest more money, invest in more stocks, and see your returns. And I really want you guys not to be so short-term focused. Oh, my stock is trading flat for, 6 months. I'm going to get out of it. No, it's wrong. Just don't. If the fundamentals haven't changed, stick to your guns. Find the reason why you originally liked that company, invested in it, and stick with it, guys. That's all I have for today. Click the subscribe button. Throw me a like. Throw me a comment. What's your biggest gain on a stock? What's your biggest loss? Mine's 40%, so tough to beat on that one. Thank you, guys, and I will see you next time.